Equity and fixed income markets continue to remain volatile. Within the fixed income side, we have seen positive volatility, and we saw continued optimism on the overall monetary easing outlook pushed the yield curves further down, and that resulted in improved performance of bond funds relative to money market funds. The overall during this period we saw, although the monetary policy announced by State Bank did not resulted in any change in the discount rate. However, the tone of the monetary policy and the continued lower oil prices, international oil prices, have kept the fixed income investors, particularly the banking sector, upbeat about the overall interest rate direction going forward. However, at MCB-AH presently, given the risk to the external outlook, we do not remain too much optimistic upon further significant reduction in the discount rate going forward. Therefore, we continue to maintain that although bond funds would continue to remain better relative to money market funds in terms of yield accruals, however, room for big interest rate cut is unlikely. So we advise again investors with a longer term investment horizon to remain focused on the bond funds, while the money market funds should remain be the focus for investors who have a shorter time horizon and lower risk appetite. Within the equity market, things continue to remain difficult for the equity investors, continue to test the patience of equity investors because of overall drought in the stock market. We have seen again the commodities, the global stocks and local stocks all appear correlated, highly correlated. We see positive openings in the commodity market again resonate here in the international local market alike. Going forward, we expect that this environment would continue to remain in the short term. However, the market's potential in relation to gain given the lower interest rate, overall improved economic position remains firm. So we continue to like the stock market. However, we think that this period in the near term would continue to test the patience of investors, and the volatility is likely to remain high as we have seen in the past few months. And given the significant correlation due to foreign selling in this period, we see that there is a possibility of seeing corrections and sharp recoveries during this period. So we think that timing the stock market in this period would be a bit difficult. However, the investors with a longer term perspective should remain upbeat on the positive, better than fixed income yield returns from the stock market.